So we'll get started for the director's cut. It's December 13th, releasing October production information. And so I will let Lynn go from there.
Great. Yes. So we're talking October production. And I guess I would say in summary, it should be a very happy holiday for the state of North Dakota. Set a new record in oil production, first time ever over 1.5 million barrels a day, 5% oil production increase, about a 4% natural gas production increase. So that also is good news in that typically we've seen much higher production increases in natural gas when we saw oil production increases. So that's great news. October oil prices were a little weak, but still exceeded the state revenue forecast by about 2%. And completions starting to slow, but still exceeded the revenue forecast by about 1%. So great news there. On the gas capture front, record volume captured. However, we didn't increase the capture percentage from September to October. When you include the confidential wells, we didn't see an increase there. And we have seen a slight drop in rig count again. We're at 53 drilling rigs today. That's more seasonal and capital centered than anything, but probably more seasonal. We're coming right to the end of the year, and difficult weather, difficult drilling operations. Good news coming out of Vienna. Earlier this week, I think it was, or maybe right at the end of last week, OPEC and Russia announced deeper cuts into their crude oil production. So OPEC Plus is going to take another 500,000 barrels a day off the market. That provided some very needed support to oil prices, and we saw an uptick and then a little bit down, but they, in general, are significantly better than they were in October. So that's good news. And when I talk break-evens at the end here, I'll kind of reference that. So that was good news as well. I just want to talk about gas capture a little bit and then break-evens. You can see that we stayed essentially the same in terms of gas capture, and that the volume flared ticked up just a tiny amount, a very small amount relative to production. We still see the huge disparity between the Fort Berthold productivity and the statewide productivity in terms of natural gas capture. And clearly, if we can get our arms around the reservation flaring, we'll be able to get to the goals that the commission has set and that industry has set. I think, the announcement yesterday is going to be really significant in terms of that. The Elk Creek natural gas pipeline came online yesterday. That is going to allow Little Missouri 4 and Demicks Lake 1 and Kinder's Roosevelt plant and Arrow's plant all to move to 100% of their capacity. So that's enormous. They've all been operating well below capacity because of an inability to move natural gas liquids out of the state. So Elk Creek natural gas liquids pipeline coming on yesterday, I just can't overemphasize how important that was to what's been happening infrastructure-wise in terms of gathering and processing capacity. So we should see, when we look at the December numbers, we should see significant improvement in gas capture. November, not so much. And it'll be interesting to see if we're able to sustain production growth or just sustain production. My anticipation would be flat to maybe a slight increase in November, but December should certainly be better. So when we look at, I guess the last thing I want to talk about before we take questions was our break-evens. We do this on a quarterly basis. It's at the very end of my email that I send out. I think the good news here is that every single place in the state that people drill Bakken and Three Forks wells is economic at today's price. So when you adjust these break-evens for West Texas Intermediate prices, which is what I've done, there is no place where people drill Bakken and Three Forks wells in the state that is not economic today in terms of West Texas Intermediate prices. Some of the other plays, such as the Spearfish and the Red River and some of that in Golden Valley and down in Bowman and Slope, not economic at this time. But those areas, in particular the Red River, is pretty much on hold until the CO2 pipeline comes next year. So we'll want to be tracking that, and we'll start to talk about it early next year. The CO2 pipeline should start in the spring, coming from Bell Creek, Montana, and it should arrive in Bowman County in the third quarter, with the plans to start injections fourth quarter of next year or first quarter of 2021. And so we'll start to see the benefits of that CO2 injection certainly in early 2021 in terms of Bowman County production. And that'll lead to some drilling down there, but not a lot of drilling required for that project. So really great news on every front in terms of, I guess there was one thing I noted in here, and that was real weakness in natural gas prices. You know, when the cold weather swept through the Midwest and up into the Northeast, natural gas prices temporarily spiked upwards, but we are at the 5-year average for natural gas storage. And so as soon as that cold weather passed, natural gas prices dropped again. And that again makes it difficult in terms of how we're going to do gas capture. It just gets harder and harder. So when you compare the estimated wellhead value of crude oil in North Dakota to the wellhead value of natural gas, it's like 38 to 1. You know, it's an insane differential. And so that makes it very difficult to attract investment. Stay tuned. Tuesday, the Industrial Commission is going to be looking at an order to deal with this firm capacity idea that has been raised by industry in terms of better incentivizing infrastructure build out. So we'll be talking about that Tuesday.
Okay. Any questions?
I think you had said, Lynn, that okay, oil production's up 5%, gas production is up 4%.
Yes.
Why? And maybe this gets at what you were just speaking about, but why was gas production less this time when you said often it's higher?
Sure. So the question was why gas production went up less than oil production this month when typically it's gone up more. And what we have seen is completions and drilling move out of the core area of the Bakken. That has expanded. So we're seeing drilling rigs and well completions in northern Williams County, southern Divide County, northern Mound Trail, southern Burke, and down into further to the southwest into Dunn County. And those non-core areas of the Bakken, they're responding very well to the new completion technology. They're economic now, and the gas oil ratios there are 1/2 to 1/4 of the gas oil ratios in the core area. So as we see more production come from those areas, we're going to see maybe gas production stay in sync with oil or maybe slightly lag. And that'll help with gas capture infrastructure as well. But the reason is that a significant amount of activity has moved outside the core, the gassy part of the Bakken and Three Forks.
And how would you define where the core area is?
We actually have a list of the fields that are in the core area. It's on our website, but to sort of summarize it, if you drew a line from Williston to Stanley, down to Mandaree, back over to Watford City and up to Williston, that box would be the core area. So, and if we went the opposite direction, it'd go from Williston to Watford to Mandaree to Stanley and back to Williston. Everything inside that box is core Bakken. It has very productive middle Bakken with a lot of gas and productive Three Forks upper, middle, and lower benches.
Can you discuss what the impact of OPEC's decision may be from a barrels per day perspective for North Dakota?
Yeah, so when we look at the OPEC decision, that is, and the response of the WTI oil prices and even our North Dakota sweet prices, it's going to make it a little bit easier for companies to raise capital, and got a little boost to some of the stock prices. So the end result of that should be slow to moderate growth in production, as opposed to pretty much flatlining. I mean, in the absence of that, we were looking at overproduction all the way through the end of next year. And so it was going to be a struggle just to sustain this 1.5 million barrels a day. But it should result in small increments of production growth through the year 2020.
Could you discuss maybe the significance of some of the 3-mile wells in Divide and Burke County? Noting especially when Canadian oil exploration is moving towards southern Saskatchewan.
Okay, so I don't have a lot of information on the southern Saskatchewan stuff. We have a quarterly call scheduled with Melinda Yurkowski with Saskatchewan Geologic Survey. We have started having discussions on a quarterly basis. That'll come up next month. So I don't have much information because we haven't talked since September, I guess it is. However, we have seen extremely good results coming from the 3-mile long laterals in southern Divide County and in Burke County. This is an area that traditionally, with the 3rd generation completions and 2-mile laterals, the wells were 250 to 300 barrel a day wells. They were sub-economic at these prices. The 3-mile laterals and the 4th generation completions, which is cemented liners and perforation clusters and more stages and diverter and all these things that they've added to hydraulic fracturing, are yielding IP rates between 950 and 1100 barrels a day. So we're talking like 4-fold improvements. We are seeing a significant number of cases on the docket for respacing a lot of those areas. So southern Divide County and southern Burke County, we've seen a lot of cases on the docket to respace our 2-mile spacing units, rearrange them instead of having 3 2-mile long spacing units stacked up across the township. People are coming in now and rearranging that into 2 3-mile long. So watch the docket and you can kind of see that there's a lot of activity in that area.
How common are 3-mile laterals today?
So the question was, how common are the 3-mile laterals? And they're still the vast minority. I would say maybe 10 or 15% of the wells are being drilled with 3-mile laterals. They are more expensive and they really only yield these great economic improvements in some of the non-core areas. So that's where they're being applied, is in the non-core areas, and that relates to, maybe 5 or 6 out of our 53 drilling rigs.
Is it pretty standard to do 2-mile laterals still?
Yes. Yeah. So the question was the standard, is it really 2-mile laterals? And it certainly is. We spaced everything out that way, and industry has really developed a well factory system, almost an assembly line of how to drill those kind of wells. And so those are the kind of wells where they can be super efficient, drilling 2 or 3 a month per rig, and they understand how to complete them and maximize the recovery. So yeah, that's really the standard.
And then I had a question for you about breakevens. Over the past year, have all of the different areas that are currently profitable with breakevens not been profitable? I mean, do we just finally get to that point now?
Yeah, so the question was on breakevens and profitability, and it's been interesting. So each quarter, we've seen those breakeven prices drop by $1 or maybe slightly more than $1 per barrel. And so up until just this last quarter, Burke and Divide counties, and we do them by county, but Burke and Divide counties were not economic, or they were marginally economic. So some people drilling 3-mile laterals were getting great economic wells, and others still struggling with 2-mile laterals, or not really understanding how to do the 3-mile laterals efficiently, were drilling sub-economic wells. So yeah, we just in the third quarter of 2019 did Burke and Divide County become economic in terms of break-even oil prices.
Just the Elk Creek pipeline, is that an NGL pipeline?
Yes,
Yeah.
natural gas liquids. It originates right around Sidney, Montana, at One Oaks Grasslands gas plant there, and it terminates, I think, in Bushton, Kansas. But then it also allows NGLs to jump onto another pipeline and move to the Gulf Coast from there. So yeah, it cannot be overemphasized how important that pipeline is. I anticipate that within weeks, if not days of startup, that thing will be full. And so there's already plans in the works for an expansion. Justin can talk more about that, but it's a big deal.
Have we received any update from PHMSA on the Washington?
We have not. There have been a few questions asked, and no response, no update. That would be a great gift before the end of the year, wouldn't it? So let's hope. But they do have till April 20th. We don't think they'll take that long, but they do have that long.
Any other questions?
On that case, are you thinking you can avoid court?
We are, yeah. We're very hopeful that we can avoid litigating this thing. Now, the question will be whether the state of Washington wants to take it into the courts. But the great news is that the approach that we took, and we're anticipating a positive decision by PHMSA, would put it into the DC Circuit Court instead of the Northern California Circuit, where it's much less likely that the state of Washington would be able to overturn PHMSA's decision. So it's kind of, double stacked that way. So yeah, we are anticipating that we'll get a positive decision out of PHMSA, and that the location of where the litigation would have to be filed will inhibit it being litigated.
And then you were talking about Bowman County and the enhanced oil recovery project that's happening there.
Correct.
Right. And you said, down the road this could lead to more drilling there. Do they do, or are they planning to do horizontal drilling and fracking there? Is it more conventional drilling?
It'll all be horizontal. So the question was, what kind of drilling in Bowman County? That entire unit is developed with horizontal wells. So it'll be horizontal drilling, but they do not hydraulically fracture the wells. The rock is productive enough to be economic without hydraulic fracturing. And that's good news for enhanced recovery, because it's often difficult to control the material that you pump into the reservoir to do the enhanced recovery. So one of the things that is going to be interesting there is that the EERC, in partnership with Denbury Resources and with Department of Energy money, has gotten a grant to test artificial intelligent completions, or I guess you would say valves that can be installed in these wells to open and close in response to trying to make the carbon dioxide move uniformly through the reservoir. So they've gotten a grant, and they're going to test this technology. It'll be the first time it's been utilized in the world, where you can actually use a computer to open and close valves in the injection well and in the offset producing well to try to control where the fluid goes in and where it comes out. So that's going to be a really neat project. And this will be the first well, I shouldn't say it'll be the first horizontal CO2 flood in the United States. We have one right north of us in Saskatchewan in the Weyburn field and in the Midale field. This will be the first one in the US.
Where specifically is that carbon dioxide coming from? Is it
It's coming from some gas plants in Wyoming. And so they discovered some very deep natural gas deposits along the Rocky Mountain front in Wyoming that contain a lot of carbon dioxide. And for the first decade or so that those gas deposits were produced, the CO2 was stripped out of the gas and vented, but it's now being captured and used to CO2 flood oil fields. So it'll be captured and stored as a part of the EOR project.
Up in the north central part of the state, like Bottineau County, Renville, that area, do they horizontally drill and not frack there, same as down in Bowman County, or how is?
They horizontally drill. So in the north central part in Burke and Divide and Bottineau counties, those are different formations, but the horizontal wells there are hydraulically fractured, not to the quantity of a Bakken well, but the Spearfish wells and even the Midale Nesson or Mission Canyon wells that are being drilled in Burke and Renville County, they are hydraulically fractured. And so that's some very new, unconventional plays that we are talking to the USGS about so that those can be incorporated into this next assessment that the USGS is going to be coming out with next year or in early 21.
All right. Thank you, Lynn.
Hey, you're welcome.
Has that chart always been red and green, or is it just for the holiday season?
Which chart?
The one you have on
What?
your screen. Sorry,
I'm lost.
completely uncalled for.
Fire up a second. Okay, perfect. Well, good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into an update of all things midstream related. Taking a look around the region. Again, you heard the update from Lynn on the oil production for North Dakota. You can see then the stats coming out of eastern Montana and South Dakota. Some interesting news you'll see in my written report. As of right now, Montana has 2 active oil drilling rigs. It's been quite a while that I can remember since they've had at least 2. They've had 1 at periods of time, but now they're up to 2. I don't know exactly where in the basin they're active, but we'll keep an eye on that, see if that changes anything from a production dynamics going forward for the region. Slide 3 here, this is again that month-over-month changes for crude oil in green and then natural gas in red. And interesting, so the monthly gain we saw from September to October was the second highest month-over-month change that North Dakota's seen. And if you look back at those charts, the top 3 months were all Octobers. So I thought that was also an interesting tidbit of information. I don't have a good explanation for you now on why that is. And the 4th highest was a September. So there's something about this later fall time period with the summer months and production upswing. So natural gas, again, we saw the increase, but from a historic level, not at the same type of caliber that the crude oil change was. From a oil transportation, a lot of things were quite static, no major shifts in the way that the oil was being marketed out of the region. Pricing and market conditions were fairly consistent. You'll see in a moment we saw a little bit of change in where the barrels were going in September, but I'll comment on that here in just a moment. And then again, just that historic long-term trend, very, very stagnant the last number of months between the amount of market share for pipeline as well as crude by rail. And then from an overall perspective, again, percentage-wise, it was consistent, but because of the production growth, we did see some increased volumes leaving the region by rail car. So somewhere, again, in that neighborhood of about 260, 280,000 barrels per day is the current estimate for those volumes. And then where the barrels are going. So we did see a shift. So September is the latest information from the EIA on destination for crude by rail. And we did see a shift where the Pad 1, the East Coast, became the dominant destination. And so one thing that was happening in September, that was during the Saudi oil attack. So those East Coast refineries, they really only have two options for crude sourcing. It's either waterborne barrels coming from foreign sources, or it's crude by rail coming into the region. And so when there was that supply disruption in the month of September, the alternative then looking at domestic barrels from places like North Dakota to feed those refineries and keep the product stream moving. And then just again, a quick snapshot of what the oil pricing looked like during that time period in September. Still continued Pad 1, Pad 5 having the highest oil price markets. The other thing that may have been influencing, along with the Saudi situation, was the East Coast was paying higher pricing. You have to take into account it's a little bit more expensive to get to the East Coast than the West Coast. So, all things considered, they were still pretty much on par from a market pricing perspective. So I would suspect that it's more driven towards supply disruptions from waterborne shipments in that month of September that led to more North Dakota barrels being marketed towards the east. And where we sit today, again, still very consistent between that $5 and $6 range of WTI versus Brent pricing. That's still right on that cusp for those barrels that are being marketed out of North Dakota, whether they get on a pipeline system or a rail car. So I don't expect any major shifts in what we see as we move through November and now into December when those reports become available. As far as barrels then moving north and south from through the border ports, as far as exports, those were very consistent September to October, but we did see a decrease in the amount of traffic coming in from Canada, again, either by truck or by rail car, but still certainly within some of the historic averages. So nothing to be too alarmed about right now. Then switching gears to natural gas. This is that pie chart from September to October did not change at all. The same breakdown month over month. And you can see again, historically, what that breakdown has looked like. So we do have some additional processing plant capacity that will be being brought online. We had 4 plants between the August-September timeframe and November. We'll start to see those impacts in December and early 2020 for getting more volumes into those gas processing facilities. So stay tuned. We're going to likely see some definite shifts in the way the gas is being captured and processed. And more good news on just watching those connections. So it's always good when the black line here, the number of new wells that are connected and selling gas, keeping that trend at least at the pace of new wells producing gas, but it's always positive when we see that black line exceed the red, which means we're getting more gas connections. The new wells are selling or producing natural gas. And then just an updated look with this new jump in natural gas production. The OPEC news and the EIA updating their oil price forecasts. They did strengthen some of their near-term oil price outlooks. And so that all gets wrapped into that forecast that you see. And so we saw everything shift up, not only from historic production, but then the expected production with those higher prices in the next year to 2 years. And then just the long-term outlook. Again, we've got another 4 to 5 plants coming online in the next couple of years. But again, we certainly have not seen the end of it. Tremendous amount of additional investment and opportunities that the midstream companies are working on as we speak. And then last but not least, this was touched on earlier. It's had some coverage in the news, but again, cannot be overemphasized. With these new processing plants that not only just came online, but the new ones that will be coming online, you can have all the processing capacity in the world, but if you don't have an outlet at the tailgate of that facility for those NGLs, that plant would become congested and will not be able to operate at its stated capacity. So having that outlet now in service will allow those new processing facilities, the future processing facilities, to have outlet options for those barrels of NGLs and getting them down to consumers in the U.S. and then globally if they get all the way down to the Gulf. So with that, I'd be glad to answer any questions.
Well, I have one. There had been discussion about making the northern border completely North Dakota natural gas instead of taking some of Canada. Do you have any idea what the status of that is?
Yeah, so it wouldn't be so that the question for those online is looking at residue or dry gas transmission out of the region, and that natural market share change between North Dakota gas on northern border versus Canadian gas coming down. And it's not necessarily a structural change that the pipeline operator would make. It's more of the market dynamics where we have growing residue or dry gas production in North Dakota from these new plants that are coming online and expanding. And the marketplace will be such that the North Dakota gas will have to compete and push its way from a marketing perspective on a northern border. So it's not necessarily something that the company is making a shift of, we're going to take more versus Canada. It's more market driven, where the marketplace is saying these MCFs of gas need to move. Northern border is really our only outlet at this time for any type of growth. And we've seen that shift over time, and we expect that to continue till theoretically it could go all the way up to 100% North Dakota gas.
Do you think there's any rhyme or reason why we're seeing 2 rigs in Montana right now?
Again, without knowing any of the details, who the operators are, what their acreage positions, if they only have acreage positions in Montana and maybe none in North Dakota, or what the dynamics are. So it's a little bit difficult to say with any certainty.
And then you said that September was the latest data that we have from EIA about oil transportation. In August, I don't know if they released like monthly reports or monthly numbers, but in August, was it West Coast that was still dominant for North Dakota oil?
Yes, it was. So the question was looking at that shift between July, August, and then into September for those barrels being marketed by crude by rail. And there was certainly a definite shift from that July, August timeframe to September, where we saw that dynamic change.
And then do you expect to see that shift that we saw in September? Do you expect to see that last for very long, or do you expect to see West Coast become the dominant place again for North Dakota crude by rail?
So the question was, what should we expect for that market share going forward? I think October we may still see some of the higher volumes going to the East Coast. It wasn't long before Saudi Arabia was able to bring production back online and catch up, and the supply balance to work itself out. But the other thing, going forward, until we have some type of pipeline capacity expansion, whether that's Dakota Access expanding, whether it's a Bridger expansion project, right now, North Dakota is producing more oil than we have pipeline capacity to handle. So any incremental growth in oil production is likely getting it on the rail network. And so it will be up to the refiners and those marketers to say, okay, what's the demand at each of these points, whether it's East Coast or West Coast, and what are the options to get it there. But I do expect that until we see some type of pipeline expansion take place, incremental growth will likely lead to higher volumes of crude by rail.
Back on Elk Creek.
Yep.
I think your slide said that it carries 240,000 now.
Correct. Yep.
And it's expandable now to 400,000, the way it sits.
Yep, correct. So that pipeline system is coming online here just as we speak. We'll have an initial capacity of 240,000 barrels per day of Y-grade capacity. And then that would be expandable. ONEOK has not made an investment or corporate decision to do that, but theoretically and mechanically it could be expanded if they choose to do so up to 400,000 barrels.
So would that be compressors or something?
Additional, horsepower pumping stations. Yeah.
Do you happen to know how quickly you can get a barrel of some sort of natural gas liquids from here to Kansas?
As far as so the question was how fast, what's the speed of that
Yeah.
pipeline? So typically, a typical pipeline system's operate anywhere from a brisk walk to a very slow jog. So without doing some quick math of how many miles that is, but if you can think about 24/7, how long it would take you to lightly jog or walk to Kansas. So.
Okay. Any additional questions for Justin? All right.
Okay, well,
Thank
thank
you
you.
for joining us.